Okay, I'm back again. I had to go check in on my son. Yeah, I really am a parent and juggle a whole lot of things around the house. Anyway, pick back up where we were. Uh, the monthly charts are giving reversal signals on the indicators. Weekly chart is also giving reversal signals. And again, the daily is giving some reversal signals. And here we are with what appears to be a confirmation on the MACD. However, at this particular moment, the STO is deep in the oversold territory. So another thing to point out, this right here is this 200-day moving average. It's pretty close to it, within about 50 cents. Yeah, thereabout. Stocks have a tendency to bounce up and down off these lines. This blue one here is the 50-day moving average. Notice how it bounces back and forth. When this little mini trend here started, notice once it broke above the blue line, it traded up and catches support in the general area there. That's simply these are simply averages and different views. Past 50 days for the blue, 200 days for the red. So it's considered to be trending if it's above that line. If it's below it, it is in a sell-off. So when it approaches this line here, most likely there's going to be some sort of support, temporary uptrending if this appears to be going into a downtrend. There'll be some sort of reaction counter to the trend usually. How deep into it all depends. Anyway, getting back to it, it would definitely appear we have a trend here, moving from 20 to about 38. Now, I use something called Elliott's wave theory. Now, I don't get too deep into this because it's one of those things, it's highly objective, and you could end up wasting all your time trying to prove the trend. In a general sense, it's just a way of measuring the general patterns of a trend. So using this, just immediately off the top, it looks like this is wave 1. This would be wave 2. Wave 3 would be either this peak or this peak. And it looks like 4 would end here, and this would be 5. Generally, in any trend, and this segments down, it goes from major trends that last hundreds of years to a few seconds. You can break it down that far, but no one has time to go that deep into it. Anyway, that's my gut reaction. Later on, if I decide I want to, I might apply more tests to it to just make sure I'm on the right track. But just for demonstration purposes at the moment, that's what I'm going to go with. So, to analyze this chart, and I'm using stockcharts.com, this is where you get to draw all the pretty lines. Okay, so first thing, just start with a broad trend, being that it appears that it is at the least correcting or reversing. I'm going to use something called standard retracements or Fibonacci retracements. I want to try to get as close as I can to this low here, which is 2047. Sometimes you can hit it dead on with this, sometimes it's just general, but this, it's not dead on to the penny, no matter how you cut this. What you want is a general idea, get into your position, and then carefully watch it. But this time I got lucky with it. Okay, so what you see here now is a representation of, based on this, the shortest trend here on a daily chart, how it is most likely going to retrace. Places where you look for reversals would be at 38.2%, which would be 31.7, then 50%, 29.55, 61.8, which is very significant when you're dealing with Fibonacci ratios. And there's another one that's not marked here, which is usually 78.6%. I've heard that referred to as the golden bottom. A lot of traders look for a reversal if it retraces that deep. And usually you can get something out of a trade with that level. If you're just looking to make a buck or two out of it, using that level is a pretty good place to start. Okay, now pattern analysis. If I get good signals on the indicators, the STO, the MACD, confirmed by the other two, then I will begin this way. I'll look for places where I want to start. Now, kind of eyeball it here, and oh, lo and behold, I pointed out this, what looks like a double top to me here. Now, the rules on a double top, literally, two tops, the 38, the 238 ones here, they kind of hit a ceiling, I guess you could say, and there's a trough in between the two. One thing that I'm going to skip down here and look for, yep, sure enough, let me get a line here. I like using thin lines. Starting here with the peak, you bring that down to where it found a low here at 33.01. Look at these red volume spikes. That's a price falling on heavy volume. You need to keep in mind, and this is why I believe so much in technical analysis, you are trading something that its price rise, the price falls. If the people in the market are not buying, the price is not going to rise. If people are selling out, the price is going to fall. It doesn't matter how great the company is. You can make an argument that if the company's rock solid and things like that, the price might not fall quite as far, which is true. But I have yet to see a stock, particularly one that is, I guess you could say, technology, consumer discretionary area like EA Sports, to outperform the S&P or the Dow by any significant amount. And when I say significant, I mean like 3% or more during times of market correction. I've yet to see that. And I've been watching this stuff on, I guess you could say, a semi-daily basis for several years now. Okay, so this is our first clue that this is probably going to be a double top. Volume's rising pretty quick here. I'm going to scroll down here. Yep, look at this trough right here in the same period, or lines marking here. That's your first big dip into the negative territory. And let me scroll back down here and just make sure. Yeah, they look pretty close. There would be some divergence, but Calkin Money Flow, I've never been able to trade on divergent signals with it. That's why I use it mainly as a volume confirmation. Okay. Now, let's look at the pattern. We got volume pushing it down on one end as it begins, and as it comes up to its peak here, which was last week or so of August into September, you notice you've got several volume spikes here, and it would appear, based on the daily volume, that there's more selling days on heavier volume than there are up days. Notice how the black up days here, there you don't have very many that spike up, particularly compared to this. All right, so we've got our first clues. Now, a double top, we would draw a line like this, and another line up here. I like to try and stay on the conservative side. It looks like it's going to be about like that. Maybe bounce it up a little bit. Okay, so now you have your framework of it. Now, what I like to do, so I have a visual, particularly because I use my iPad a lot, being a dad here at home, I have to just carry it with me. I can't fire up my computer all the time. If it breaks, now I would probably be a little more aggressive with this, but should this break, when it finally pushes down below this lower line, what you're going to want to see, rules-wise, is a close below the line on the day, or if you pull this up on a 2-hour chart, which I'll probably do here in a little while, you want to make sure the bar that punches down through that closes below the line, and you want to see a significant rise in volume. Using a daily chart, my rule on that is 50% higher than the average daily volume. So, you know, if this is, say it trades 10 million shares a day, what I'm going to want to see is on the day that it closes below that line, I want to see 15 million shares exchanged, and preferably a bar that's to its low, that closes near the low of the day. And you want to see a pretty good punch too. I'd say at least maybe around about a 3% punch, but depending on the prices, that could be objective. It's more one of those things that as you do this more and more, you'll get a feel for what it would look like. But right now, that low is around about, looks like about 33. 33 minus 3% would be 32.01. That would be a pretty significant thing. Now, there's a couple of different ways of trading this. Once you get your confirmation, the reason I break down the daily charts is I can get faster confirmation that way. Typically what happens is once this line is broken, it becomes resistance. So whenever it drops down below it, it'll come up, and whenever you get to this area around about 33, the reaction should weaken significantly. And then after it tests that line and fails, typically it'll continue on down to the target. Another rule here I'd like to point out, particularly on this type of pattern, the double top, is the two peaks must be within 3% of each other. If it's, say, this came up to 4% below, then I wouldn't call it a double top. I would look for a different type of pattern. So just to make sure, I mean, I can look at it and tell that 38.64 minus 3%, 37.48. So we're well within the guidelines for that. So to set your target for this kind of pattern, if you recall, I drew this line from where I placed the top line to this, and I want to make sure that's red so it stands out. Looky here. Down here at the bottom would be the price target for this particular pattern. Notice how close it is to the 61.8%. That's something I like to see. It just lends more credence to it. Another thing, we have a corrective history here in this area, and let me see if I can get a nice large line here. You notice there's a lot of resistance. And support right in this area here. Let me scroll this down a little bit. If you notice, right here in this area, you got a lot of zigzagging up and down, coming up, touching the line like at the 27.24. That's a lot of resistance. Then you notice here, in this past February, when it finally broke through that line, it came up, it caught support here. Then it continued on. So I would say there's a pretty darn good chance that the price for EA is going to be down around 27, 28 area. Another stock that I'm following right now that I plan to trade back and forth is GM. It has a very similar situation. Okay, now what I like to see more than anything are you get a large kickoff pattern, you get a sub pattern, and they're all within a reasonable amount of the same price target. Now I think I might see another one, although it's not a very clear one. I'll just go ahead and draw the line from here to here, and thin that out just a little bit. This right here looks like it could be what's called a head and shoulders pattern. This is it would be a Head and Shoulders top. There's two different types. To give you kind of a clue of what this looks like and why it's called that. Whenever you draw this to traders, this looks like shoulder 1, shoulder 2, and a head in the middle. Now, these things need to be volume confirmed. Yep. Generally, you'll have pretty good on the uptrend. The bottom pattern is a little different, but as it pushes up, you have decent volume with the trend until it reaches the top of the head. Which, if you look back here in May, you have a pretty good bar, and you've got the Kalki money flow pushing to new highs back in May. Well, as it continues on, notice how hard this is pushing up from here to here, and the momentum is really slowing here. Well, if you notice, this is also where you're beginning to get the high volume spikes, the red spikes to the downside popping up. And notice how quickly the Kalki money flow begins to drop. All right, so I think we might have a pattern. Now, if this thing broke, most likely it would have broken somewhere in this area. So let's take that down and see if we have any serious volume there. Well, I'd be a little disappointed here. So I would call the question of this one, I would call this one into question. Although there is a very large spike here. So how about I investigate this? Maybe this line down here at the bottom is called the shoulder line. Maybe my shoulder line's just off. So let's get rid of that one. Look at possibilities how it could be drawn. I like using, particularly with the Head and Shoulders top, I like using bars that closed on their lowest low. So it looks like 2664 was a pretty serious one. At the 3301, that was a little hard to decipher. There's a very short interval right here we have 2 days. If I were to draw it there, it doesn't quite look right. I draw it here, it doesn't quite look right. Well, I'm going to go ahead and use a conservative estimate here. Maybe if I bring that out just a little more. Yeah, I don't know if his Head and Shoulders is going to really cut it. However, try to keep an open mind to it. Let's go ahead and see if we can find any type of price comparison here. From there to there. No. Yeah, I don't think that's a valid Head and Shoulders. So, in order to keep from confusing myself when I check these charts later, I'm going to get rid of the lines here. Okay, so based on this chart, I seem to have, at the very least, a double top that has a target that goes down to a standard retracement. And here's the old trend. And it has definitely broken. As you can see, it fell through here, came up, caught resistance, and then continued on down. Now, how I trade this, like I said, as of right now at this particular level, without further investigation on even smaller charts, I would wait until this broke through the bottom line, make sure the volume, the daily volume, the volume on the day that it trades below that line has at least 50% more volume than its daily average. It closes below the line, and then there would be two strategies that I could use. Just go ahead and jump into it, which I would investigate that using smaller charts, or if I wanted to stay just with a daily chart, say I'm a trader that doesn't have enough time to deal with it every single day and watch it from minute to minute. If I were that kind of trader, I would wait for a reaction test. It may trade back up and test that line. However, I've seen it do that, and I've also seen it just continue to fall all the way down to the target price. So, it's really up to you how you want to do it. I prefer breaking it down to even smaller charts and refining the point where I enter. So, I'm going to upload this chart because I believe that's a good one. And now, the trend that I'm looking at to trade is running from about last December. Everything seemed to start right about here, so I think, you know what, I was getting signals back in May that a reversal was coming. I think I'm going to go about mid-April, so that's going to be 1, 2, 3, 4, 5, 6. Okay, I'm going to set up a 2-hour. Ooh, 6-month 2-hour. I about did that backwards. Okay, here we go. You can really see that double top down to here. Now I may pull my line up just a little bit, and if I do that, it does look like it is broken, and that might explain why today is kind of lagging. It's testing resistance. That bar where it fell through, 2 million in volume. That's, as you can see, you don't even have to do any math on that. For a 2-hour chart, 2 million is definitely above what its average would be. Okay. Okay, so at this level, I'm going to quickly do some pattern analysis we know about based on the retracements that we did on the other one. We know about where the retracements are going to be. We can cross-reference that chart, so we don't need to go that deep into this one. So what I want to do here, because I've got a broad view and I can segment this chart even further down in order to see better detail, I want to mark where I think that double top is. And since we got a lot of zigzag action here, the thing I don't like about the lower trough at this area is that it's not down there very long, and there's not much resistance coming back up. So I'm thinking right along here is probably where the true line is. It just punched through, and that was a false break. Caught a few people in a bear trap. Yeah, there's some pretty creative names for different things that happen in market trading. Okay, so it looks like 3660. Let's see if I can get the marker on that. 50, 53, 60. It gets frustrating from time to time to get this just right. There we go. Now I'm going to mark that. Zip my line through there. And bring this over just a little bit more. I think I'm going to expand my chart just a little bit there. Maybe I won't cover my face too much. Alright, that line looks good and straight to me. Now, see, you get even more detail on this other high. Notice it didn't stay up there very long. So it's looking like the majority of the action would run about like that. Get my line good and straight here. And what do you know? Yep, it's almost on par with this one. So I'm going to use that as my baseline. I'm going to measure the distance. Now the price target on this is the distance between the top, between the bottom trough here and the two peaks. So being I'm not very confident about this low, I prefer to stay on this side of caution. I'm going to pull that up because these things don't fall exactly it. And I'm going to put this here on my possible break where it broke through that possible line. And then, because these charts update daily, I'm going to put myself a little hook line there so I can see where it's going to be. Alright, so I've got my target here. We're looking at such a broad view, it's going to be kind of hard to see what's what, but since this downtrend started, it looks like about right there is going to be, it's in that line out a little bit, so it looks be a little easier to see. Looks like that'll be the first low on the STO. And keep in mind, my main baseline is the MACD, and I use the STO to confirm it, as well as comparing the MACD to even larger bar charts. So as you can see here, it does appear that there's some divergence on that one. Now, we have what looks like divergence on the 2 hour. I like to call this position divergence. Notice this price low, well, I do apologize. It's not yet divergence. In order for this to be divergence, the current price is going to have to fall below 33.01 for that to be a divergence signal. And if you look, this is what I was talking about. There was no reversal signals on the downtrend on the daily and weekly charts. Here is what I was talking about. As someone that tries to trade short lengths, we have a divergence signal on the 2 hour chart. Had I been shorting this from this high, whenever I saw that, I would have covered. Even though it didn't show up on the daily chart. Because if it's showing up here, it's definitely showing up on the 30-minute and 5-minute charts. So pretty much, I use the daily and weekly and monthly to define what trend I'm going into. And I trade my couple of weeks to month-long trades based on your intraday charts, your 2 hour all the way down to 5 minute. I can even get it down to 2 minute and 1 minute, but I mainly use those to get a feel for, is the reversal signal that I see on the 5 minute and 30 minute chart really valid. Anyway, we have what looks like could be a break here. The momentum on the MACD seems to be slowing down a little bit, but I need to upload this chart now that I've got my basic where I want to go with it on there. I'm going to say this is 2 hour strategy. Okay. Now, I think what I'd really like to pay attention to at the moment would be from this last high, because this, I would say, that was the trend. Now we're beginning something new. So the downtrend starts here. There's a reaction to it, so now we're at another sub-trend. In Elliott's wave theory, a correction typically, you'll have your first downtrend as an A, a reaction to that downtrend, which would be your B, and your correction finishes with a C move. And these waves can be broken up into smaller waves. Usually an A looks like a motive wave, which would have your wave 1, wave 2, wave 3, wave 4, wave 5, and that's when it ends. So, given this a look here, that looks like 1 of A, 2 of A, 3 of A, 4 of A. 1, Yeah, 1 and 2. Yeah, that would be 1, 2, 3, 4, possibly a 5. So that could be your A wave move here. Now I'm a little curious about this because this coming up looks more like a motive wave to me. It's possible that this could be the A, B, C. Your B corrected moves typically do not look like motive waves. The ones with 5 waves in it typically looks like a corrective wave, which has 3 waves in it, counting its counter move. Now your C wave usually is a motive wave as well. This entire thing looks like a flat corrective. See how quickly this can get very confusing? Okay, I'll go ahead and back off that just a little bit. Anyway, back to it. I need to shorten this up now that I've got my baseline. Okay, so we're starting from late August. So we go back 1, 2, yeah, 2 months should do it. Because what I'm looking at now, I want to watch that sub-trend. Because if I get into this going short, I want to make sure my signals, that I don't accidentally catch a signal that I can't see from the broader chart. So first thing I'm going to take a look at is this MACD. So far, nothing on that. Now, this low was 33.19, 20, and 33.14. It does not appear to have any type of reversal signal there, but I would like to shorten this just a little bit more. Remember, I've got the larger chart. Cut it down to 1 month. And voila. Yep, there's no reversal on that last low. And it looks like it broke that. And that 2 million volume on this, see how massive that spike looks as it drops below that line? That's the lower line of the double top that I was talking about. And we have volume falling. This right here looks like the relative strength. Downtrend resistance is going to be about right here. We're well below that. Now, I probably would not enter this trade on the information thus far, because it's just barely below that line. Relative strength is very low. There's a bit of an uptick here on the MACD, even though it's not in a position to set off a divergence signal. And on that last low, the STO, oh, that one's going to be very hard to judge. Short term, it looks like it's a neutral sitting on the STO between this one and this one. And, oh, it seems to be out to the third one too. That's a little more encouraging. However, on a two-hour chart, it's threatening to do a crossover here. So based on what I'm seeing right now, I'm not hot to trot with it. I'm willing to bet that this is probably corrective, and I can probably get a better price to sell from here. It would widen my target range. My son's beginning to wake up again, so I'm going to have to stop it right there. And we'll continue to work with it too. This is kind of how my day goes. And this will be the theme of my YouTube videos. Is pretty much you follow me through the day. Maybe you can pick up a few tips on trading. I love to cook. That's actually how I unwind myself during the day. And I love to work with my hands. So anyway, I'm going to stop it there for the moment and try to pick this up again a little bit later, and I'll try to edit all these videos. I'll try to edit all these videos into one nice streaming one.